Um, Welcome back to Pinpointing Lounge. Today, in today's video, we are diving into the world of top-down analysis. So we're gonna discuss about top-down analysis. This is a powerful approach to forex trading that helps you understand the bigger picture and make more informed decisions. We will break down how to analyze markets from the macro level down to specific trade setups. So this is what we're gonna discuss about it. So the overall reason that we are going to discuss about the top-down analysis and how to do it is because of top-down analysis is like zooming out on a map before finding your destination. In forex trading, it means starting with a big picture. We're starting with a bigger picture, global trends, major drivers, and narrowing down to pinpoint high probability trades. So now on the top-down analysis, we're gonna look at the macro view. We have to identify the trend, narrow to pairs, and technical analysis for what trade setups. That's what we're gonna do today in today's video. So now before you start doing top-down analysis, you have to start from the bigger picture. That means we're gonna start from the monthly, weekly, daily, 4-hour time frame up to 1 hour time frame, and then we use the 5 or 50 minutes time frame for our entry. But before you could start, you have to have a daily bias. You have to have a daily bias, weekly bias, and then monthly bias. Already, if you doing analysis, top-down analysis on gold right now, XAU. Today is January 10th, right? Oh, sorry, my fault. Today is January 11, 2026, and I'm gonna show you how to do top-down analysis just to have a bigger picture about what the trend or the market is gonna do for the whole of the week, monthly, or something. And today we're gonna start doing analysis we have to have a weekly bias. We have to have a weekly bias about what the market intends to do this week, so that when we know it is bullish, we should never look for sales. When we know it is bearish, we should never look for buys. So we're gonna start with the trend. Look for the trend, look for the market structure, look for liquidity sweep. You look at the price action before we could execute a trade with high probability when you do top-down analysis. Let's dive into the video. So now before we will start doing analysis, this is how I do my top-down analysis to show you, so that you could have a high probability setups. Now you have to go to 1 month time frame, and 1 month time frame is showing you that we're still in uptrend. So we're still in uptrend, there's nothing to worry about. This is how it's going. We're still in uptrend. So now our bias for the monthly time frame is clearly, we don't have to do too much. It's what? Uptrend. Now we don't have to do too much or waste too much time. We have to go to what? Weekly time frame. And what the weekly time frame is telling us, that we're still what? In uptrend. We don't have to do too much. You see, we're still going up. So our bias for the weekly too is what? Uptrend. We're still bullish. Now this is where we're gonna start with the analysis. We're gonna start with the daily time frame to know what's going on, where we're supposed to get in for the week. Now we're gonna use the daily time frame. Based on the daily time frame, we could see there was the market just came to right here. There was a consolidation for longer period of time at this zone. It consolidated for longer period of time here before we got the breakout. So this is where all this trend started. all the trend is started from this place. It form higher high, lower high, higher low. Then we came here, started forming higher high, low, higher low, higher high, lower low. My fault. It started with higher high, higher low. Keep on going that way. So before you could just know how you're gonna do or start analysis, first of all you have to look for the market structure. And when we see market structure, identifying market structure is forming, identifying the what, higher high. This is how it looks like: higher high, higher low, higher high, higher low, higher high, higher low. This is what we call uptrend. And now if you're looking for downtrend, you have to look for what? Lower low, higher low, lower low, higher low, lower low, higher low, until maybe it change to form, to break the higher high, and to retest to form a higher low and higher high. That's how the trend is. This is what we call the market structure. Now, how are we going to identify? You could just, as I show you here, it's easy for you to identify, but on the chart it's gonna take some, it's not that really easy. So now we have to find the trend to form the market structure in the real aspect of life right here. So now I mark trend line. I don't use trend line to hop into a trade, but it helps me to know the direction of the market if it wants to change the trend or something. But I don't use it to execute trade. It helps me knowing the direction of the market, what the market is doing. But I don't really use the trend just because of it has been my trend, and doesn't mean the market structure has really changed, or I should just sell or I should just buy. So now this is my trend line. I'll call this my external trend line. There is trend in a trend, but this is the extreme trend that I'm gonna say. I'm gonna name it. I'm gonna name it my external trend line. My external trend line. This is daily time frame. We're using the daily time frame, so we're starting from we already know that monthly is bullish, weekly is bullish, and now the daily too is bullish. How we gonna know the daily too is bullish is by looking at the structure. So now, based on that, after it broke the structure, it was forming in the daily time frame. Market was forming a higher high, lower high, higher high, higher low, higher high, higher low. This is how you mark it. If you look here, after it break the structure here, we form here, it came higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Then it came back here to form what, another what, higher low. We started forming. So now, before you could say that the market is still gonna continue, this is the last guy that caused all this trend from this place. So now we have to mark it as our extreme points. So now we mark here at this place before we could know from at this cell, because it started changing the character and forming what, it broke this side, it formed a new lower low, higher low, lower low, and then lower high. It's supposed to form a new lower low, lower high, lower low, but it couldn't. So this is where everything stopped out. So let's mark this as our interest to this zone. Then we mark here. We mark here. So let's see it in it. Then we mark here too. And we mark here. So now, anytime the market is going on, anytime there are equal highs, there are liquidity above the level. Anytime there are equal lows, there are liquidity underneath. Now there is a trend. What is the trend right here? After we got to this level, it retraced back, and then we started forming a new trend. What is the trend? The trend is that it was from after you got here, it was started forming higher high, lower high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. And now the market is right here and the market is closed. So at this time we could boldly say at the current price is still bullish. Why am I saying it's bullish? Because we have a break of structure right here. So breaking of this structure is clearly showing us that the market wants to go further, and now it went further. This is the daily time frame. Now we know that based on the trend is what? Uptrend. It was forming a market structure of bullish. It was forming higher high, higher low, higher high, higher low, higher high, higher low. And at the extreme point, at the extreme level, it was able to um close above it. Anytime a candle close above a equal high or a support or a resistance, it's just telling you that buyers have taken control and it's gonna continue. So while all this push that you came is for correction, it came to retest and continue going higher. Perfect. So now we're gonna use supply and demand in our strategy for us to get into a trade. That's what we're gonna use today. So now we have to go down to see what the market is really doing again, because we could not just get in without having any confirmation to have a probability entry. We have to refine it to what 4-hour time frame, and now this is where you're gonna see the market clearly. And now I'm gonna mark the levels for you to see how I mark my structure. Now I'm marking the structure because I want even a beginner, any advanced trader or professional trader, I don't have to mark the levels for him. But for beginners who are watching my video, I want to show them how to mark a market structure. How to mark a market structure. So now the market is going, it was right here at this equal highs, and then here it came here. So breaking this level means it has changed the character. It has changed the character, right? Because it was forming higher high, lower high, higher high, lower high, and now it broke it. It break it. So now this place has turned what? A change of character or break of structure, however you name it. If it's market structure shifts, if it's BOS, if it is change of character, however you call it. So let's name it change of character. Call it church or however you name it for the. And now when the market came here to break it, it came here and it formed a what? How you call it? A lower high, and then it came here to form a lower low, lower high, and it couldn't form a new what? Lower low. So this is where the trend ended. So this is where the trend. So the starting of a uptrend now. This is where we started having a new trend for the current price. This is a new trend because this is where the market for the downtrend ended and it started forming a new trend. So the starting of this trend is right here up to this level. Up to this level. Then we mark this level as our extreme zone now. So this should be our extreme zone, no more this, because we've taken these people out already. So now buyers have taken control of the market at this level and they came to retest. So now what we're gonna do is we should just look for our entry and know how to mark this structure. So now based on our 4-hour time frame, this is where it just started from right here. You could see it from right here. What happened was that the market, after it got here, it couldn't. This is the current um lower lower high. So let's mark it as our current lower high. Let's mark it. Because when the market came here, it formed a new lower high. It's supposed to form a new lower low, and it couldn't. So this is the current. That was the current lower high, and then boom, it couldn't break this level, and then it came back to form an equal highs, and it came down, and then boom, it break the structure. So now we could say this is our break of structure. BOS. So it has. So this is the point. Is gonna tell us that now bias has taken control with momentum. So now you could not just get into the trade. There's another what higher low. So people might say, okay, this is could also be what church change of character right here. This could be a change of character right here, and this is what's the break of structure right here. This is how you mark it. So now we could not just get into it. Now this is telling us that the market wants to go up, and now it came back to tap into what a demand at the discount price. So there was a demand right here. This is how you know the market went here, tap here, and then boom. You see all this. So now we know that we are now in uptrend, and now it came back, it resisted, it came back, and then boom, from this place we also had another what BOS. So BOS, another what BOS, change of character. So now it came back, it came to this level, pull back, and we also what came to break this level, BOS, came to this extreme zone. So now if we use the 4-hour time frame, it's gonna tell us that the market is forming nice structure. A pullback, form a new higher high, pullback, form a new higher high. So now at this current price, we're just gonna follow the same shit because Marfa. So it came to form a new higher high, and this is the last level. After this level it pull back, this is the last candle that formed this uptrend. So it came to retest to that level again at the discount price. And what do you expect the market to do? To form a new higher high again. We're just following the trend. We don't have to do too much. So the trend is like we are in uptrend, so we don't have to go against the trend unless we see otherwise. Otherwise means when we see a change of character. So now it's forming higher high, lower high, higher high. We pull back here, and then we form, let's say, higher high, higher low, higher high, higher low. So now here is a supply, right? But we're still in uptrend. I told you anytime we are in uptrend, we should never look for sales. We should never look for sell. We should look for buys only unless there is a change of character or change of trend. If we are in uptrend, and if we are in downtrend, because here there is a market structure shift right here. When we came here, what happened was that it came to this level, it formed a new lower low, new higher low. There was a break, change of character right here. So we got a change of character here. We got a change of character right here, but we did not change the trend. The market structure is still bullish. Why? Because this is the last candle that caused all this trend. This is, let's say this is the last candle that caused all this trend, this. So we're still bullish. We're still bullish until it comes back to kill this place. So selling at this point is what is high risk, that high chance that you could lose, because we are in uptrend. We are uptrend. But this should be our supply, because this is the consolidation came before the downward movement. So now this should be our supply, or this should be our order block. And then now it came to this level, it retested this level, so we should expect the market to what, break this level, form a new low, higher low, and we go again. If not, that means the trend is continue. But the moment we see something like this, we have something we call if this then this. If something like this, it couldn't break, and then, or maybe it swiped people out without forming any candle. It came to this level and it break this level. It came to change the character here. If it tap into our supply, and then we came to change the character, it came here. We could buy here, we could sell right for. It means the character wants to change. We could sell right here and come here, and our stop loss should be at the top here. But if not, we have to what, have the patience. Now we have to look for demand only. We have to look for demand at this point until we see the market. We are in the supply right now, and now we are using the 4-hour time frame, so we have to zoom into the 50 minutes time frame. 50 minutes time frame, and then if we see some higher high, lower low, lower high, lower low, lower high, so now we could sell at this point to bring us to this level, to this demand, to this demand. So we use demand and supply for our entry and our exit points. So if you want to buy, your entry should be demand, and the next supply should be your target. And if you use supply to sell, you should also use demand as your what, point of target. That you should use with what, as your exit point, like your target, your take profits. For now, at this current price, we know that the market is still bullish. We are forming higher high, lower high, higher high, lower high. So now at this point, I think here selling here is kind of risky. We have to have a confirmation, but the confirmation is that we already had the confirmation. There was change of character right here. It came to this level. So now we have to wait for what, a standard confirmation at this point. Then it will bring us down here. If not, we should expect the market to come here and come and tap into our supply. So if you look at the weekly time frame, there were equal lows and equal highs. So now what the market did was that last week or last 2 weeks, there was a demand here. There was a demand right here. So after it came back to retest the demand, and then we went up. And now there is another demand right here on weekly time frame. But we still have space under it. So now the market could come down to fill this gap, and we also have another what, another what, demand right here. But our focus should be this place for the week, to this place, to this place, to this place. And what did I tell you? I told you anytime there are equal lows or equal highs, there are liquidity beneath it or above it. So here what we have was that we have a weekly low here, equal low here. So let's name this as our equal low, equal um equal weekly equal low. So weekly equal low. And there are what weekly, what we have also, what we have here is also what weekly equal what high. So now anytime there are equal lows or equal highs, there are liquidity above it, and the market is driven by liquidity. It's chasing the liquidity. So wherever there's money is going, it's attracting it. So now there is demand benefits. So if this is sweep these equal highs and it couldn't continue, we should expect the market at this point to come back to this, to clear this equal low, to tap into this demand, then we go up again. Yep. So now we should have our area of interest for the week, and our area of interest, our expectation is from this zone to this zone, or maybe from a new higher high to this level, because there's nothing here to use to know this is the target here. So now we should expect the market to continue going higher high, or what, to come back to our demand, then we go higher. So now we have to refine it to like daily time frame, and now we came back to the time frame to see what's happening, and the daily time frame too is still showing us the market structure forming higher high, higher low, higher high, higher low. And what happened was that it formed a equal highs, and then it didn't even sweep this liquidity, and there's still what, a gap right here. There's a gap here, the market. So now let's mark our 1 day demand. Let's refine it to 1 day, from weekly to 1 day. So now we've reduced the size, and there's a 1 week supply at the top here. 1 week supply at the top, and this is weekly one daily daily demand. So we should be trading the nearest demand or the nearest supply. What's the next daily demand at this point? This is the nearest demand here. I think we filled the gap. It has filled it, or it's not. Let me check. Let me zoom in. No, there's still enough space for it to come and fill. So it has reason to come back. You see, we still have some space in it. You see, there is space. It didn't really fill it for the daily, so it means it's still valid. So this should be our daily demand, daily demand, and daily demand. So now if the market comes to this demand, we should look for 4 hour or 1 hour change of character, then we go up. If it comes here, we refine it, but it's too big for us. Imagine you get in here at 4,400, and your stop loss should be below is. That's too much. We cannot do this type of trade. So now we have to keep on refining it from top to down, so that we could have a high probability setups. Now from the daily, we've marked our demand and we've marked our supply. Then we move back to what, 4 hour time frame from here, to see what the market wants to do for the rest of the week. And now there's a gap right here. That was the last week jump. When the market opened on Sunday or Monday, the market jumped right here. There was a market jump. There's a gap right here. So never so the market has reason to come and fill this gap, and right under the gap, that's when we got the what, the equal low, weekly equal lows. So to me personally, I think the extreme zone for this trend, if it's got rejected here, we should expect the market to come to this, to clear this equal low, and tap into our demand and we go up. That's how I do my top down analysis. And then, or the market will come and fill this gap without clearing the equal lows and go up. So if this, that's when the rules comes, if this then that. Now we are in the supply. To make it the supply invalid is when we have a candle closing above this, it could come and sweep it, leave a long wick. That doesn't mean the supply is invalid. That means that doesn't mean the supply is invalid. And to come right here, and it will what also come right here, tap into the supply here, fill it and drop to come and fill this gap and return. Or it will what from here, it will come to clear this equal lows and go higher. So now what we're gonna do is wait for the market's reaction, market price action, to determine what it wants to do for the rest of the week, or if we could be having high probability setups and having an edge. So now looking at that, let's go to there's a gap right here and there's a demand right here. The 4-hour time frame, let's refine it to this demand. Here I say we could refine this to this demand. That's how you see everything. We've been reducing everything, and now after that there is another demand right here, although it has been filled already, so there's no reason for it to come here, but it's still a demand. So now this demand has been filled already. This demand has been filled already, so let's ignore it. But we're looking for setups for this week only. So this demand has been filled already. It came to fill this demand already, so we don't have any reason to get into the trade right here. So we should expect a virgin setups only, like a place that has never been mitigated. So this place has never been mitigated. So, and there was a jump, there was a gap right here, and a demand, 4-hour demand. And here we are in the supply. We are in the other block. So now all we have to do, if we want to sell, listen, if we want to sell, we are now in the 4. Let's go to 1 hour. We could see another. The 4 hour is still too big for us to get into a trade. So now we could refine this as this our supply. This is one supply, and this is another supply too at the top that has not been filled. So now we could use it as another block or the whole point. So now if we have reason for the market to come and it's very close, is why don't we wait for it to come there or miss the trade? Having a no trade is also a trade because you've saved your money. So now I'm expecting that if the market taps here and we started seeing some change of character, like in 1 hour, in 50 minutes time frame or 5 minutes time frame, starting seeing a series of lower low, lower high, lower low, lower high, we could just place our buy here, sell here, and then expect the market to come into our 1 hour demand or supply. 1 hour demand, because, and I told you, anytime you use supply as your entry, you use the next supply or next demand for your targets. That's how you trade. If you use demand for your entry, you should use for next supply for your target too. So now, based on the 1 hour time frame, we are in the supply right now, and the market could jump when the market is open to tap into this supply, then to come back down to fill all these gaps. So we should use our demand for this week, for the daily. We should use the 1 hour or 4 hour, right, for our entry, for our entries only. So now this is a new 4 hour current, the closest demand right there, right here, and there is another one here, and we have an imbalance right here, you see. So now this should be our demand, this should be what supply and supply. But I told you, you shouldn't go against the trend. You have to have a standard confirmation before you could just get in. So now we are in the uptrend. All we have to look for demand only. We don't have to, we could just sell here and then boom, it's continue going up. So I think selling in this market is kind of risky. It's just a temporary I don't know, it's a temporary sell. It's gonna be a temporary sell until we have a strong change of character. And this we still, even though a big this structure doesn't mean this, maybe it wants to come to only this level, that's it, and then continue going. So now we have to look for buys only. We are an uptrend. So if the market comes to this level, it might push it to this demand and go higher. If not, it from here come to this demand, it fails, we wait for this extreme zone. So buying here on 4 hour time frame is what, a premium price. You bought it at a premium price, and then buying at this demand is an equilibrium price. It's an equilibrium price, and this is the discount price. So if you think you don't have enough capital to get in or to risk, so you could just wait if you want to have a swing trade. But we are day traders. If you want to have a swing trade, wait for the market to come to from this supply. If it is this supply is able to hold, let it come to this supply extreme zone to clear this equal lows and take you high, or this demand. If this one fails you, let it come and clear this equal lows and tap into your what demand. There should be a reason why you want to buy this, and there is what, a reason, because we have what, a demand right here. There's a demand right here. So now we have to wait to see if the market do this, then this. So now we're gonna apply the rules here. If the market do this, if it comes here, we start seeing in the supply, we start seeing lower low, higher low in a smaller time frame. So now we could say this should be our entry, and the demand here should be let's say something like this. You could use this demand as our TP1, TP2, if possible TP3 here, because the moment it breaks this level, there's no reason for it to stop here. Although it is the people call it breaker block right here. So let me mark it. So now if you do the higher time frame, you could see high probability places where the market could react. So you only trade at the key levels. So now this is breaker block, demand, and then demand. So now the market, all it could do is it might come to, so buying here is what? This equilibrium price. Buying here is what? Discount price. And buying here is what? Premium price. So selling here, we sell at the premium, we buy at the discount price. So now, before we could even buy at this point, we have to have something we call it breaks this level, retest, then we go higher. So now, this is how I do my top-down analysis. That's it. So now we have one demand, two demand, breaker block, this gap, come and tap into our demand. If this, so we have so many regions. If we sell to, this should be our target 1, target 2, target 3, target 4, target 5. And if we buy, if we wait to, if it's not able to, we could just buy here, stop loss beneath. If it fails, we go for this one, stop below. If we go here, stop loss below this. If it comes here, stop loss below this. So your stop loss is gonna be always small and your reward is gonna be huge. Imagine it comes into your demand right here. The stop loss is going to be right here. Give it some space. And let's say this is your target. That's 1:2 or 1:3. Always have a risk reward ratio. If it comes to hit this demand too, it's going to be your, let's say, TP or maybe all-time high. If not, this, that's it. So you don't have to chase the market, do nothing. So we have if this, then this, if this, then that, if this, then this. So now, yeah, supply if this, then this, or if this, then this. If it comes here, it breaks. If this, then we come here. So we have so many opportunities to get into the trade. So now, that's it. And you know how to have a standard. We use 4 hours, so now we go to the 1 hour time frame. It's telling us the same thing. So now if we think, so it's the same shit. So if we think the 4 hour is too big for us, we could refine it the same. Something like this. We keep on refining it. Yeah. It has already mitigated it. Oh, nice. Yeah, this 1 hour is the same. We have two here. This and this. Or this up to this place. And we have another region here. So now when the market open, that's it.